In July, we passed the largest tax cuts in American history, including no tax on tips, no tax on overtime, no tax on Social Security for our great seniors.
President Trump made a lot of proclamations about tax policy in his campaign and now throughout his administration. And it's very important for taxpayers to check what the president has said. What the tax breaks do is reduce your taxable income, and perhaps you will pay less tax, but it's not an outright elimination of tax for any of those things.
Most of the impact of this new bill was to keep things in 2026 the way they were in 2025. So if you're comparing to what you're used to in 2025, not a whole lot of change.
Most of the tax breaks in the new tax law for 2025 are tax deductions.
Rich people get so many deductions. I'm the king of deductions. I love deductions.
The One Big Beautiful Bill Act passed last year raised the standard deduction across the board for tax year 2025. The standard deduction is a fixed dollar amount that reduces your taxable income. The vast majority of filers take the standard deduction. This year, there is a new $6,000 additional deduction for people age 65 or older. This so-called senior bonus deduction phases out for taxpayers that make more than $75,000 or $150,000 for joint filers. There are other deductions that are new this year, too. For example, if you work in a restaurant and you receive tips, you may deduct up to $25,000 in tip income. This deduction phases out when single taxpayers earn more than $150,000 or $300,000 for joint filers. If you receive overtime pay, you may deduct a portion of that pay up to $12,500 in overtime. Only the premium portion of overtime pay is eligible. So if you're paid a standard $20 an hour, but $30 an hour overtime, only the $10 portion can be deducted. The deduction also has income phase-outs. And for people with car loans on new vehicles purchased last year for personal use, you may be able to deduct up to $10,000 with an income phase-out.
By the way, there's one proviso. It has to be made in America.
The child tax credit is the most widely claimed credit. In 2025, the maximum benefit rose $200 to $2,200 per child. You can claim this credit if you have a child under the age of 17 at the end of 2025, and they have a Social Security number. And it's above the line, which means you can qualify for the credit and still take the standard deduction and not have to itemize. Now, that said, the credit phases out for high earners. President Trump has stated that his goal for these tax breaks was to make sure that it would improve the economy. The average refund this year is estimated to be $3,800. That would be an increase of $800 compared to last year.
Individuals will get, $1,000 or more, but it's all stimulus now.
So we will likely see taxes reduced for millions of Americans, and we will see millions of Americans receive larger refunds. The larger refunds most Americans can expect stem from an IRS decision not to adjust withholding tables after the new tax law passed. That's why it's so important for you to check your withholding now. See what you're paying for 2026 so that you're not surprised by a large tax bill next April.
In order to save taxes, you really have to start early in the year and think about the following April 15th. And if you do that, then you can save a lot of money.
But the issue is millions of Americans are also paying more for everyday items than they ever have. Whether this will truly stimulate the economy depends a lot on the affordability issues facing millions of Americans.